Hello, everyone. My name is Chris Godby, and I'm an equity research analyst at Johnson Investment Counsel, joined today by Joe Edelstein, who's our consumer analyst. This is the JIC Research Edge video series, and for those of you who aren't familiar with it, our goal with these videos is to give you, our clients and friends, an inside look into the world of investing from a research perspective. Today, we're here to talk to you about Procter Gamble's proxy fight with Nelson Peltz of Trian Partners. Now, the unofficial vote is in, and it looks like Procter & Gamble's management has held off Mr. Peltz. Mr. Peltz is still appealing the ruling to an independent auditor, so it might take a couple of weeks for the final vote to get ratified, but at this point in time, it does look like P&G is victorious here. So, Joe, can you give us a little bit of color in terms of how the vote went down? How close was this vote?
So this vote was incredibly close. It's reported that it was really within a margin of only 1%. Now, as I've kind of looked at some of the math, the retail investor base, many of whom would be P&G employees and retirees, that group owns about 40% of the stock. Now, presumably, they voted with management. There's some that may have felt that CEO David Taylor, who's really only been in the role for less than 2 years, just simply needs more time to execute his plan. There's others that have felt that Mr. Peltz could be a distraction inside the boardroom. And I think it's also important to recognize, particularly for P&G retirees and employees, that that group particularly has ties to the greater Cincinnati area. They may have been concerned around some of the recommendations that Mr. Peltz has given as it relates to what the local market impact would be in the future. Now, on the other hand, the institutional investors, that's really the hedge funds, mutual funds, that group owns about 35% of the stock. I believe that they, for the most part, voted with Trian. They simply may have been looking at some of the recent performance of P&G stock and have been wanting more, so they're looking for a bit of a change and believe that that may have come through. Now, that really leaves us then with some of the large index funds, some of the passive ETF type funds. That group is about 25% of the overall shareholder base. Now, Wall Street Journal and CNBC have both reported that this group was actually split on their votes. So State Street and BlackRock, which together own about 10% of the stock, actually voted for Trian, but then Vanguard, which has about 7% of the stock, voted with management. So really, you can slice the numbers in a lot of different ways, but really a close call here.
Joe, the vote was razor close, but P&G's management team won at the end of the day. But still, this has to put some pressure on them. How do they approach running the business from here?
So P&G management and the board, clearly are on the hot seat now. I think going forward, they're going to be held to a much higher standard. I would think that they'll continue to pursue, the strategies that they've laid out, particularly around innovating around large global brands. Also looking for them to continue to execute on the cost savings productivity plan that they put into place. But at the end of the day, if these things aren't working, they could certainly look to ramp up the cost cutting program and even potentially look to headcount reduction as well.
Nelson Peltz has lost his battle with P&G here this year, but can you see him coming back next year and waging another round with P&G?
It's certainly possible. Trian still maintains a very large stake in P&G. Mr. Peltz clearly has a very large realm of influence when you just consider how close the vote already was. And in fact, Mr. Peltz has already come out and said that he would be likely to seek a board seat at some point going forward. Now, P&G's board does operate under some rules that allow for annual voting of its members. So while that's a little bit unique, it does actually open the door for this event to occur, sooner than later. Now, separately, I think it's also important just to remember a proxy fight in which Mr. Peltz was involved, but one that he actually lost. This is the DuPont proxy battle from a few years ago in 2015. Now, that company really wasn't able to execute its plan. The CEO at the time ended up resigning. The new CEO came in and it ended up working very closely with Mr. Peltz. So he was very much involved in that process, even well after the fact of losing the original proxy fight. And I suspect that going forward, he will continue to have a very strong dialogue with David Taylor, who at this point has said that he's open to hearing ideas. But this is clearly still an unfinished business, I think, for Mr. Peltz.
Okay, well, it sounds like Mr. Peltz isn't going away, and P&G is going to continue to have to deal with him. Thank you very much for watching at home. If you do have any questions, please reach out to your portfolio manager. We're more than happy to help. Thank you.